a predictable operating environment and creates the appropriate incentives, again, aligned with the science, is needed. We saw it in COVID. I think the same can be said for climate. So having some type of mechanism to encourage climate action is something we would really welcome.
Well, and then are there any specific initiatives that you think that the government could be helpful on?
Well, I think what you raised in terms of climate action, and, I'm not a policymaker. I don't know the specific public policy mechanisms that would be best, but something that would encourage climate action in line with what we need to get to around a 1.5 degree warming scenario. That's what we're shooting for through our own actions. And, I'd say we're going to do what we're doing in line with the science regardless, but I think it would help, especially in some of these areas. I mentioned transportation as one where we need technological innovation to actually achieve our goal by 2040 for certainly long-haul transportation. Having a favorable policy environment for something like decarbonizing transportation would be just an example.
Well, it's interesting, too, because I've been talking, we had a Bloomberg Global Sustainable Summit here recently and talking with the Cisco CFO and the CFO over at AB InBev and their chief sustainability officers as well. And, there's lots of conversations about, using government policy maybe to impact truckers to some extent because they create the most usage and destruction, if you will, to our roadways when we're talking about infrastructure, and how by doing so that might help create more innovation, right, to a more sustainable way. And so I hear what you're saying when it comes to trucking because that's a big initiative, and you do wonder whether, government policy along those lines can make a difference, right?
Right.
So,
yeah, and then, coming back
to
something you were asking me before the break in terms of emissions reduction, you asked a really good question, which is, gosh, doesn't 2040 seem late? Certainly would be late for the action. But the science-based targets set out a trajectory that we are following that has us reducing, day by day. So, for example, our most recent reporting of our calendar year 2019 emissions, we're down over 12% versus where we started in our 2015 baseline, and we're about to come out with our latest numbers for 2020, which you'll see a further decrease. So please don't take me as suggesting we wait till 2040. We're moving as quickly as we can day by day. That's the date we get to zero on our scope 1 and 2.
Well, and I have to say what really caught my attention, and we were talking about this in our planning, is you guys are committed to protecting, restoring 50 million acres of land, 1 million square miles of ocean. You are doing these things aggressively. You're thinking about our community at large. What really moves the needle, do you think, when it comes to reducing our world, our corporate world, our everyone's impact on the environment? And just got about 40 seconds left here.
Okay. Well,
sorry.
In terms of environmental goals, we're now learning that natural ecosystems are as challenged as climate. So that's why we set that goal. And it is about rewiring food production of other products so that the way we do that is regenerative to nature. We enhance soil health. We can improve water quality. We can improve biodiversity. That's what's needed. And our secret sauce is Walmart, and we invite other companies to do this too, is to connect the big goals that we have to achieve as society to the practical action we can take through, in our case, business, a retail business. And it's true for any company. And that's really what ESG is about, and recognizing that those things create value, financial value for the company, as well as help society address these tough challenges.
Absolutely. It's why you see, increasingly, right, the CFO and the chief sustainability officer like yourself working hand in hand, because they do go hand in hand. Kathleen, I know it's a big world and a big conversation, but thank you so much. And I hope we can continue it in the future, because it's certainly something I know our audience increasingly cares about. She is Kathleen McLaughlin. She's Walmart Executive Vice President, Chief Sustainability Officer, on the phone in Canada. All right, back to World and National News. Over to Nancy Lyons. She's in our D.C. studio. Hey, Nance.
Hey, Carol. Harsh words from House GOP leader Kevin McCarthy after Speaker Nancy Pelosi rejected 2 of his 5 choices for a select committee to investigate the January 6th riot at the U.S. Capitol. Pelosi says she had concerns about the statements and actions taken by Senators Jim Jordan and Jim Banks. McCarthy says Republicans will form their own team to investigate.
House Democrats must answer this question. Why are you allowing a lame duck speaker to destroy this institution? This is the people's house, not Pelosi's house.
McCarthy made no mention of the fact that Republicans rejected an earlier attempt to create a bipartisan panel to probe the violence. Members of Congress have been hearing today about the impacts of the extreme heat scorching much of the nation, but lawmakers seem to disagree about the severity of the problem. The top Republican on the House Subcommittee on Environment says progress has been made in combating the efforts of extreme weather on communities, but the subcommittee's chairwoman, Congresswoman Mikey Sherrill, says it's likely we're seeing an undercount of those who die from the heat.
Extreme heat is the deadliest natural disaster, killing more people than floods, tornadoes, and other extreme weather events combined.
Sherrill says urban communities are especially at risk since they have more pavement that can raise the temperature by more than 10 degrees. Russia has successfully launched a long-delayed lab module for the International Space Station. It'll provide more room for scientific experiments and space for the crew. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, along with Charlie Pellet, joining me right now. We're continuing to track, some of the stories when it comes to getting back to work, but also virus and vaccine stories. Let's go to, first of all, Charlie, AIG, because we can continue to increasingly hear about when and how companies, specifically in the financial sector, are getting back to work. AIG, American International Group, Charlie, telling employees that September 14th will be the official global re-entry date for staff to return to the office. So a week and change after Labor Day, right?
Indeed. We've got our reporter Max Reyes on the case. He has seen an internal memo that says local regulations will determine what health restrictions staff will be asked to follow. But as you say, September 14th now appears to be the date for the official global re-entry date. Of course, lots of moving parts when it comes to monitoring what's going on with the variants, as we have been reporting, and perhaps taking this a little bit wider, finance companies in specific, yes, on the one hand, they have been laying out plans for returning to the office. On the other hand, seem to be a lot of different approaches, and whether it's paying employees more, whether it's encouraging them to come back to the office certain days of the week, but certainly a broad range of approaches up and down Wall Street in terms of getting people back in the office.
I'm getting confused about the perks to get people back to work and take vaccines, not to be, along with the perks to junior investment bankers to do their thing, right? There's I don't know, I'm kind of mixing them up. Anyway, so as you said, it will all depend on some of the different areas of AIG's operations, and they point that out specifically. The other thing I want to point out, Sam Fazeli, who heads up the pharma coverage for our Bloomberg Intelligence team, has a great research piece on the Bloomberg, and he's talking specifically about the Delta variant and saying that the bad attributes of the Delta variant may warrant a new COVID vaccine, and specifically talking about the J&J vaccine, the antibodies kind of floored by the variant. So we're beginning to really parse out the different vaccines and how they hold up to that Delta variant. We'll talk about that a little bit later on.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks continue to advance as a slew of solid corporate reports takes the focus off of concerns about the economic impact of coronavirus flare-ups around the globe. We've got the S&P up now by 31 points, up by about 0.7%. The Dow up 261, up 0.7 as well. NASDAQ up 96, up by 0.7. 10-year yield 1.28%. Gold down $6 the ounce, down 0.4, 18.03 the ounce. And West Texas Intermediate crude up 4.5%, 70.23 a barrel. After the bell, we will be hearing from Texas Instruments, among many others. Shares of Texas Instruments up now by about 3.1%. Netflix shares, they're tumbling today. Netflix, in fact, suffering its worst stock decline in 3 months after the streaming giant got off to a slow start in 2021 and gave a disappointing forecast for the latest quarter. Netflix shares down now by 4.1%. Gold is down 0.4, 18.03 the ounce. West Texas Intermediate crude bouncing back up 4.5% right now, $70.22 a barrel. Recapping S&P up 30, a gain of 0.7. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. The world, the financial markets, you know we've been obsessed this week a bit with the COVID Delta variant, and rightfully so. One story in the Bloomberg today warning us that more variants are coming and the U.S. is not ready to track them. This story also a Bloomberg Big Take and in the upcoming new issue of Bloomberg Business Week magazine on newsstands, online, and on the Bloomberg, all happening tomorrow. Let's get to it with Bloomberg Business Week editor Joel Weber and Bloomberg News U.S. healthcare reporter Cynthia Coons, both of them in our Interactive Brokers studio. It's a must-read. There's a lot of information here.
Is it a feel-good story?
Well, no.
Okay, I didn't think so. There's a little bit of kernel of hope in here, but you know the thing, Cynthia,
had to dig down.
we actually started talking about this story a while ago, and the thing that just made me my ears perk up was because at that time, variants they were not part of the bigger conversation. Right. And Cynthia was like, you know, there's the threat that variants are going to come at us. We're going to have more than one of them. But the bigger thing is we don't actually know how to track them, the U.S. Other people actually do a better job of this, but the takeaway from the story is genetic sequencing is not something that has really been prioritized in the U.S. So the little kernel of hope is that there is this little patchwork quilt that I think we're going to talk about a little bit. But Cynthia, why is the U.S. not doing genetic sequencing at scale, and why are we effectively flying blind without it?
Yeah, well, it's a money issue. There's no real center. Now the CDC has some money from the Biden administration, but they're giving it out. It's not moving very quickly from what I hear from scientists in the field. But when it came down to it, we had these genomic labs at academic universities, and they would seek, grants, or they would apply for money and they would get rejected. And this happened to so many scientists I know. One turned to crowdfunding, but he didn't get much money from that. Another one actually was very dejected and about to run out of money. And someone who turned her down 5 months prior because they didn't realize the importance of variant tracking came back and said, wait, we want to give you money. So she reapplied. So it was a lot of really slapdash getting money where and how you could. And it wasn't, hey, here's a substantial amount of money. It's going to be invested through, say, academic centers and different parts of the healthcare system to get this done.
Well, first of all, I feel like you went down a rabbit hole when it came to labs that are trying to do this and put it together. Why is it so important that we do this sequencing?
So this is how we find mutations. And so a virus like COVID's changing all the time, and you have to do a lot of sequencing to figure out what's important in that. There are tons of changes within the virus that don't matter.
Right.
And to matter, it has to be, significant in terms of its infectiousness or how it harms a person. Potentially they get sicker, things of that nature, or it affects younger patients worse, or something like that. There are distinct things that make mutations concerning. But the virus is changing all the time. So you need to be keeping an eye on it in such a huge way in order to get enough data to say that this specific mutation is doing X, Y, or Z to patients. And once you have that data, then you have a better handle on how to enact measures. This is how they decide, say, the mask mandate may come back, or there may be longer quarantine times.
Versus waiting to see the impact on the population.
Waiting to see is too late because then the disease
That's
just
what I'm saying,
continues.
the sequencing.
Exactly.
Okay.
That's kind of how you would think of it in terms of the best case scenario if public health officials had the information fast enough.
Okay.
They could lock it down really fast. Granted, it feels like we're in a post-lockdown world, but not necessarily. Just in the U.S., it seems like that might not be a strategy that's readily employed at this stage. But still, it could be if we know we have a highly infectious or highly deadly version.
Right.
Things could be done to stop it from spreading too quickly.
So some of this sequencing is actually happening in New York, in Queens, right? Talk to us about the Pandemic Response Lab and the work that they do.
It's Pearl for those of us who are cool, Joel.
Right. So Pearl, as it's called, this was an effort by a company called OpenTrons. They create robots that help automate labs, and they basically applied to be a COVID testing center, and they became this Pandemic Response Lab, and they were a COVID testing center for New York City, and they augmented the city health efforts, and that started in the fall. And what happened was early on they thought, okay, but let's figure out what's going on with mutations. So they tried to, convene with health officials and figure out if they could get some money to start sequencing. And there was just no money for it. Again, coming back to the initial issue of money.
Right.
So because there was no money for it, but they were actually in a good position, they had a lot of the technology, they decided to set this up and do the sequencing on their own dime to start out. And so they're doing the sequencing and they're giving New York all their data, and now they're participating in trying to get funding from other sources, but they did it basically on their own dime, which is pretty remarkable when you consider that's not how businesses typically operate.
Right.
Who else is doing a good job of this in the U.S.?
There's states that are doing better than others, but there's still a lot of limitations within state-based systems, but Michigan has a really strong system, but it still takes up to 2 weeks to identify and communicate a variant through the system that Michigan set up. But they are one of the bigger systems. There are some big labs around the country doing a lot of it, like Scripps in California. There's different, the Chan Zuckerberg group was doing it for a while. Now they're trying to move into helping educate labs around the country and get up and going. But there are definitely a lot of places that are doing it. The problem is there's a lack of cohesion to create something that we would consider really a system through which these folks are all participating in the same way.
Well, if anything we've learned through the pandemic is that we need a coordinated response, right? And somebody in charge of it. Where's the CDC or the U.S. government on this saying, well, wait a minute, we do not want this to happen again. So let's create a coordinated effort, maybe led by the CDC, and coordinate all of these labs.
Yeah, see, this is a piece of the CDC, and they did get this money, and they are going to spend it, but they told me, for example, they're supposed to set up centers of excellence as part of the Biden proposal, which would help bridge the gap between some academic research where this is going on and commercial labs and so on and so forth, state labs. But they're not going to fund that until next year, the next fiscal year. So that's a problem. There's money, but it's taking a long time to flow through the system. And so basically, someone proposed something to me at one point in my reporting I thought was really quite an interesting idea. Like, should pandemic preparedness sit inside of these big government groups, or should it be its own segment of the government? Should there be an agency around pandemic preparedness? Because if you look at it, and I've covered this through vaccines as well, it's pieces of pandemic preparedness are kind of scattered throughout different parts of the government. Mm-hmm. And we do have a lot of pieces of pandemic preparedness, but we don't have a lot of cohesion, not yet, even after all we've been through.
Okay, so there's a little, like I said, there was a little bit of hope. It's not all bad, but if we know
Feeling
anything,
pretty
like,
glum
hey,
right
there's
now.
some stuff that we could fix now. Abroad, does anybody else do this better? Effectively, I feel like we're flying blind. We don't know what variants are out there, how bad they are, what their capacity to spread is. But has anybody else figured out how to do this yet? Or?
In just about 25 seconds.
The UK has done a remarkable job. They came out of the gate really early, March, April 2020. They were doing a remarkable amount of sequencing. When we say there's a UK variant, that's just because they've done the work to discover something that easily could have come from somewhere else. When you think about it, possibly that's the same story with South Africa. So there are some countries and places doing it. We definitely need more of this around the world. We need some flexibility, but technology is also moving quickly. And as we're developing smaller and smaller and more handheld or easily used sequencing devices, perhaps we can get this technology out into the field faster, but it's going to take, money and
fingers crossed,
leadership.
legs crossed,
money.
And money. Yeah, money is what makes it all happen. All right, Jill Weber, Cynthia Coons, check out that story in the new issue of the magazine. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, July 21st. The S&P trading at the best level of the day, up now by 31 points at 43.54, a gain right now of 0.7%. Stocks are climbing as a slew of solid corporate profit reports take the focus off of concerns about the economic impact of coronavirus flare-ups around the globe. The Dow's up 264, up by 0.8%. NASDAQ up 100 points, up by 0.7. 10-year's down 17/32, 10-year yield 1.28%. Spot gold down 0.3%, 18.04 the ounce, and West Texas Intermediate crude up 4.4%, $70.14 a barrel. The Congressional Budget Office is out with a grim forecast for Washington and Wall Street. With that story, here's Bloomberg's Vinny Del Giudice. We will get back to Vinny Del Giudice just a little later on today. Right now, as I mentioned, stocks are pushing higher. Chipotle among the standouts, climbing more than 12% to a record after better-than-expected second-quarter results and sales guidance. Analysts view the restaurant chain as well-positioned as its sales remain robust and it pushes through menu price increases. Also, after earnings, Coca-Cola shares beat expectations in the second quarter, and the soda maker raised its revenue forecast for the year as it saw a significant bounce back in its business. Coca-Cola shares, they're up right now by 1.5%. Verizon, after earnings, up by 1.1%. Texas Instruments shares higher by 3.1%. Texas Instruments will be reporting after the close of trading. Heading in the other direction today, Harley-Davidson, ticker HOG as in hog, lower now by 6.4%. Again, recapping, stocks higher, S&P up 31, up 0.7%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So at last week's Bloomberg Sustainable Business Summit Global, I got a chance to catch up with two senior executives over at Cisco. Fran Kasudas, longtime Cisco executive who is currently Executive Vice President and Chief People Policy and Purpose Officer, along with Scott Herron, the Executive Vice President and Chief Financial Officer over at Cisco. We were there to talk about the sustainability steps and initiatives that the company has been taking for years and the impact that has had on long-term growth. We began our conversation, though, with talking about today's business environment. Check it out.
Business activity is picking up. We're coming out of the pandemic. It's picking up rapidly to the point now that it looks like inflation is not just something that's being projected, but something that we're actually seeing measured at this point. So I think the business environment in general has strengthened pretty significantly, certainly from where it was during the pandemic.
And Fran, come on in on this as well, because you're dealing with the people at Cisco, right? There's so many different policies that may be changing and so on and so forth. How do you see it when you look at the economic environment, the business environment, the market environment?
Yeah, it's an interesting time because in addition to seeing a recovery across all industries, which is wonderful, you see a very active talent marketplace. You see people moving. You also see talent right now looking at how companies plan to work moving forward, and that guiding some of the decisions that they're making. And so I would just say we're seeing a ton of movement across the industry, a lot of opportunity, and candidates feeling like they really have their choice of where they're going to work and how they want their career to progress.
There's no, Fran, just to follow, there's no going back to the way it was pre-pandemic when it comes to how we work. It's different, right? It's changed.
Yeah, it's funny. I was talking to a customer yesterday, and we were sharing that we don't believe there is any going back to where we were. We do think that both from a company perspective, but also from an employee perspective, there's a realization that we're going to work differently. Some of the research that we've done shows us now that 98% of meetings will have someone who is not in the office, so we'll have someone who is remote. And now the technology and the people practices need to accommodate that. We also see that across the industry, employees in general are saying that they want to be in the office only 2 to 3 days of the week. And so I don't think there's going back. to the way that it was before.
Well, and Scott, and just final on this, what does that mean for your business? You guys, infrastructure, this is your world in terms of connecting people. Is that good or bad going forward?
Yeah, let me start by saying I think in general it's good, right? I think there's a lot of terrible outcomes from the pandemic, obviously. No one wished for this. But I think it proved a few things that had been theorized and shown in spots previously, like hybrid work, like the ability to be effective and to lead teams effectively when they're not all sitting at their desk in the office. And so I view it just as a general societal good that's come out of this. From a business standpoint, the hybrid work and remote meetings will continue to be an upside for us at Cisco. It's to the extent that we're meeting like this, instead of sitting in a conference room, we're meeting using technology. And it uses not just our collaboration technologies and WebEx, but it uses a lot of network capacity and bandwidth, right? Inside the network, out to the cloud, and finally to the endpoint in the home. So I think in general, it's a tailwind for us.
All right, so let's talk about why you both are here, because I really want to get into this issue. And we're talking about, the initiatives that you folks have done in terms of sustainability and really how that has contributed to long-term growth. I was looking at some of the key points. You launched Cisco Networking Academy back in '97, set your first greenhouse gas emissions reduction goal in 2006. That's 15 years ago. You put out 16 years of sustainability reporting. Correct me if I'm wrong. You're getting ready, I believe, though, for the 17th. The reason I go through some of this, and I'm only scratching the surface, is that this is part of your DNA. It really has been for a long time. Share with us some of the history of this, of how it came together. And Fran, I want to start with you. You've been at Cisco for almost 17 years. Help me out with how it all evolved and came to be.
Yeah, so I would say, first of all, it is a big part of who we are. The Networking Academies was our first real push into understanding that through education, we could create access and careers for people around the world. And it's interesting, the Networking Academies feed all of our competitors, our peers in the marketplace, and we want that. We're trying to create careers for others. We have trained, if you can believe it, about 12.6 million students since that time. And so this is something that's incredibly important to us. I think from an employee perspective, our employees care deeply, and we want to have both impact from a business perspective, but we want to feel like we have left the world in a better place. A year ago, we created our new purpose, which is to power an inclusive future for all. And as you would imagine, this purpose will guide us as it relates to doing our part, as it relates to the digital divide, inclusion, climate, sustainability, and how we partner with governments around the globe. The interesting thing is that we put that purpose together right before we understood the impact of the pandemic. And I will tell you that it guided us through the last almost year and a half now around how we want to show up, how we want to have impact.
And that was definitely comments mirroring what we just heard from the Chief Sustainability Officer over at Walmart. What you just heard, though, was the Chief People, Policy, and Purpose Officer over at Cisco, Fran Katsoudas, along with the Chief Financial Officer, Scott Herron, there at Cisco, speaking with me last week at the Bloomberg Sustainable Business Summit Global. And if you'd like to hear that full conversation, you can do so. Just head to BloombergLive.com. You heard a little bit about the business environment, but really digging into the initiatives that they've been doing, the ESG initiatives, for a long time at the company, and how that has helped them in terms of long-term growth initiatives there as well. All right, you're listening to Bloomberg Business Week. Coming up, we're going to check in with our Mike Regan about a sloppy summer for stocks and how that could make investors a little bit uncomfortable. It's something we touched upon with Gina Martin-Adams earlier, Bloomberg Intelligence as well. And this, as we see stocks rallying again on this Wednesday, we're pretty much hovering near our highs of the session on the Dow, the S&P, and the NASDAQ. All right, now let's get a check on world and national news. For that, we're going to head to the nation's capital, 99.1 Newsroom in Nations in D.C., and Nancy Lyons. Hey, Nance.
Hey, Carol. House Speaker Nancy Pelosi is rejecting two Republicans selected by GOP leader Kevin McCarthy to serve on a select committee to look into the violence of January 6th. Pelosi says Senators Jim Jordan and Jim Banks voted to reject the 2020 election results on the day of the Capitol riot and should not be on the commission. McCarthy is accusing Pelosi of abuse of power.
They want to know the answer. The American people deserve that. They don't deserve politics. They don't deserve destroying the institution. No committee in Congress will work if one person is picking all who can serve.
McCarthy says Republicans will do their own investigation. GOP lawmakers, you may remember, rejected an earlier proposal for a bipartisan commission with equal powers. The Democratic leader of the Senate, Chuck Schumer, is calling for a procedural vote to begin debate on the infrastructure bill.
Schumer opened the Senate session with his motion.
The Senate will hold a procedural vote on a bipartisan infrastructure bill. This vote is not a deadline. It is not an attempt to jam anyone.
Republican leader Mitch McConnell.
The Democratic leader appears to be intent on calling a vote he knows will fail. Around here, we typically write the bills before we vote on them. So this stunt is set to fail.
Republican negotiators said another week might be enough to produce a compromise bill that can be debated and enacted. In Washington, Irv Chapman, Bloomberg Radio.
Harvey Weinstein has pleaded not guilty in a Los Angeles courtroom to 4 counts of rape and 7 other sexual assault counts. The plea from the disgraced movie mogul comes a day after he was extradited to California from New York, where he's serving a 23-year prison sentence. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in our D.C. studio. And this story, it's among our most read on the Bloomberg in the past 8 hours. Joining me right now is Charlie Pellet of Bloomberg News to break it down. Has to do with Jamie Dimon. There's a joke that goes around anytime we talk about the future of JP Morgan, who will be heading up the company. It's this whole thing's like another 5 years, another 5 years. Right?
You were talking about a joke. I was waiting for Jamie Dimon walks into a bar, 5 more years. But here's what's going on. We've got the stock higher right now. JP Morgan Chase shares up today by 2.2%. The billionaire CEO of JP Morgan Chase granted a special gift to persuade him to lead the biggest American lender for another, quote, significant number of years. He was awarded $1.5 million stock appreciation rights, which, like options, will let him capture a profit if the stock price rises in coming years.
Yeah, exactly. He's 65. He's the only sitting bank CEO who led a major firm through the financial crisis. He took over JP Morgan back in 2005, built it into the biggest and most profitable bank in the country, 16 years and counting. And you know, whenever we talk about JP Morgan and we have some big story or even an earnings story, like it comes up inevitably, Charlie, about who may eventually succeed him. It's been a topic of interest across the financial industry for a long time, especially as we've seen all of those bank CEOs who were there during the financial crisis. They're all gone.
Exactly. And another reason why this story is so incredibly important, Carol, is that it is quite possible that we will see a woman running JP Morgan Chase. You've got Marianne Lake and Jennifer Piepsack at the front of the race to potentially take over the top job. When will it happen? To quote Jamie Dimon, 5 more years.
Yeah, and listen, Jamie Dimon's gotten used to getting this question. He's found a way to answer. He says the date is 5 years away, no matter when he's asked.
Exactly, and I know you guys love to do a number of the day, but let me just share this with you here. If JP Morgan's share price grows by 50%, those options for Dimon, by the way, will net him $112 million before taxes.
All right, but here's another number. He's already got a $2.1 billion fortune.
Yeah, that puts it in perspective, doesn't it?
Thanks, Charlie.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are pushing higher at or near session highs right now with 43 minutes to go ahead of the closing bell. Let's head right over to the First Word Breaking News desk. Lots going on with today's afternoon call. Here he is, Bailey Lipschultz.
And good afternoon, Charlie. As you said, stocks are trading high as earnings season accelerates. The Dow is up 265 points, S&P higher by 30, with the Nasdaq up 105 points. The U.S. 10-year yield is at 1.28%, and small caps are up 25 points. 10 of the 11 main S&P sectors are trading higher, led by gains in energy and financials. Only utilities are trading in the red. Nasdaq Biotechs rose 15 points, transports gained 1%, semis climbed by 80 points, while the VIX is lower by 8.3%. Leaders in the Dow, Chevron, Goldman, and Boeing, while Amgen, Apple, and Walmart are the worst performers. After earnings, Chipotle surged to a record as comparable sales beat estimates, while Netflix slumped the most since April after guidance missed estimates. In deal news, MoneyGram jumped on a report it's drawn takeover interest from Stellar and Advent, and J&J and 3 drug distributors reached a $26 billion opioid settlement. Wrapping things up, look for earnings from Las Vegas Sands and Discover after the bell. Live from the First Word Breaking News desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey. And to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal, I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yes, indeed. All right, Charlie, thank you so much. So strap yourself in, everyone, because as he writes, a sloppy summer for stocks is going to test investors' stomachs. Here with more on his thinking, Bloomberg Markets senior editor Mike Regan. He joins us on the phone in New Jersey. You know, this is one of those things, you know, Mike, where it's like Monday was one day in the markets, and then Tuesday was a completely different day in the markets, and it's kind of a continuation of what we're seeing today. I don't know, when someone gives you a mission, especially like on Monday, what are they saying to you, Mike? Mike, are we coming undone? What's going on?
Yeah, that's kind of it, Carol. I mean, obviously, you know, we wanted to make some sense of that volatility on Monday, and really not just Monday, but it started, I don't know, a little bit more than a week ago, last Monday. But even if you go further back and look under the hood of the market, as you full know, I'm sure, it's just been odd to see the shift in leadership. You know, obviously there was a lot of optimism about the vaccine early in the year, and kind of the sense that, you know, the vaccine would sort of be a switch that would end the virus. We'd all get back to life as normal. These reopening stocks, you know, your cruise lines, your hotels, your airlines, anything else that, you know, involves just getting out of the house would really be in the leadership. And, you know, the bond market given a similar signal that, you know, good times were on the horizon, yields were rising. So for months, all of that has unwound. It's just made a big U-turn. So it's kind of a fascinating sort of thing because, you know, the vaccines are progressing. But I think the big thing is that the reopening, rather than being full steam ahead, sort of flick a switch and everyone's back to normal, it's kind of a 2 steps forward, 1 step back thing, especially with this Delta variant and all the other variants that are cropping up and may crop up in the future, in that it's really kind of taken the life out of that reopening trade. So the story's trying to make sense of that. At the same time, you know, people are still buying stocks regardless, right? The experience we've had over the last year and a half is the market keeps going up, but it's that sort of back and forth and volatility among the leadership that I think for a professional investor is very frustrating and very hard to navigate through. And this week is a pretty prime example of that. I mean, again, we're seeing those sort of cyclical energy and financial stocks taking the lead once again, with bond yields coming back up a little bit, oil coming back up. But, you know, it's another case where, like you said, you wake up tomorrow and see if it's take a step back day rather than take a step forward day in that reopening trade.
Well, the bond market is also fascinating, right, to juxtapose against the equity market. And they obviously go hand in hand. You've got to look at both of them in this environment. But it's interesting, Mike, in terms of how equity investors read the bond market. I mean, we've got the 10-year went, close to or hit 130 maybe earlier today. We're now at 128. But what's interesting is higher rates usually indicate some inflation, the economy getting back to normal, but that can free. So there's some who, left brain, right brain. Some equity investors say that's good. We're getting back to normal in growth. That's what we want to see. But then there's the other side. Oh wait, now the Fed's going to back off. But we should want to see the Fed back off, right? Because the only reason Fed's been so low and doing all these, quantitative measures is because we needed it because of the pandemic. Right. So how do you look at the two sides of this financial market?
I think it's a matter, Carol, of, and you're absolutely right. Interest rates, bond yields are rising very fastly. That's scary. That's bad for stocks. Right. Interest rates are going to rise. But then when they go the other way, when everyone's buying bonds, it's like, oh, well, that's bad. Someone in the bond market knows that the growth is going to slow, and this is all coming to an end. But to me, I think there's a lot of research that sort of backs this up. Is what really scares people in the equity market is when the bond market behaves in an unexpected way, and in a fast way. If rates are rising and everyone's comfortable that, okay, we've got a rising rate environment, they're not going up too fast, but we know what kind of stocks will benefit in that. So we'll load on into banks and other sort of reflationary trades, and that'll be our leadership. And on the other side, the traders in the bond market are thinking similar, and they're saying, well, let's short the treasuries. Let's all load into shorts on the treasury market and bet that they'll go down. So then, when that positioning turns out to be offsides, when, okay, all of a sudden everybody is betting on a drop in bond prices and a rising yields, and all of a sudden they start going the other way, well, that really just catches everyone on the wrong side of the playing field, right? And so they have to cover those shorts. And I think that sort of then bounces back into the equity market to some degree. If you have to buy bonds to cover your shorts, well, maybe if you're a multi-asset hedge fund, you're selling stocks to do that.
Hey, just quickly, 25 seconds here. I mean, there's also so much cash sloshing around still, right? That's got to be giving some support to the equity markets. Just quickly.
To me, that's a big sort of undertold story. I looked at the amount of money on deposit at commercial banks in the U.S., $17 trillion, a third above where it was at this time in 2019 before the pandemic. So to me, that's a lot of money burning a hole in people's pockets that's going to get spent some way.
All right. Good reporting as always. And this is in Business Week magazine. Mike, thank you so much for that. Really appreciate it. Bloomberg Markets editor Mike Regan on the phone in New Jersey. And we are looking at just about 35 minutes left in today's trading session, pretty much holding on to our best levels. We've got a rally underway in the equity market. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. 29 minutes to go in the trading day. In just a moment, we're going to check in with our own Dave Wilson, get the chart of the day, see what's on his radar. In the meantime, Charlie, where are we?
Where are we? We've got stocks pushing higher. 29 minutes to go, as you mentioned. Also coming up, cannot ignore that stock, the song of the day, one of the high points of my day. Do want to begin, though, with cryptocurrencies. They will be the focus of a July 27th Senate banking hearing. Crypto moving today, specifically Bitcoin up now by 6.3%, 31,738 on Bitcoin. Elon Musk, the CEO of Tesla, says the electric car maker, quote, will most likely accept the world's largest cryptocurrency again. And ARK Investment Management's Kathy Wood calls the digital asset a hedge against deflation. Now, they both spoke at the B-Word conference hosted by the Crypto Council for Innovation. Speaking of B-words, let's talk burritos. Chipotle surging after earnings. Chipotle Mexican Grill shares CMG on the ticker, up now by 12.1%. S&P pushing higher by 32 points, close to the best level, up by 0.7%. We've got the Dow up 278, up 0.8%. NASDAQ up 108, higher by 0.7%. 10 years down 19/30 seconds. 10-year yield 1.28%. Gold down $5 the ounce, 18.05, lower by 0.3%. West Texas Intermediate crude surging 4.5%, 70.26 a barrel. New York Mayor Bill de Blasio says the city will begin requiring vaccinations or weekly testing of all workers for the COVID-19 virus in its public hospitals and clinics. One area of concern for researchers and the medical community has been a spike in cases involving the Delta variant, along with reports of some vaccinated people getting COVID. Dr. Bhakti Hansadi is Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health.
It is very common to see individuals who still get sick despite having vaccines. We see this every year with the flu. The Pfizer vaccine studies show 88% effectiveness 2 weeks after getting your second dose. But that does mean that 12 out of 100 people will potentially still get the illness. But we know that it's the disease-sparing vaccines. They're less likely to be severely ill, less likely to end up in the ICU, less likely to die.
Dr. Hansadi with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we track, Pfizer down 0.1%. Its German partner BioNTech, the ADR is up 6.3%. AstraZeneca's ADR is up 0.7%. Moderna surging today, up by 4.1%. J&J Johnson & Johnson up 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
And you're up to date. Charlie Pellet, thank you so much. You're listening to Bloomberg Business Week, and this is Bloomberg. Breathe a little bit. Eddie Van Halen.
Right.
Jump.
Right.
What else do you want from me?
I don't want anything else from you. What the heck? I mean, the band's Van Halen, but you know you're good.
You know what I mean.
As far as, oh, absolutely. No question. And you know what's
Is that like the most iconic song from them? Or is there another
It's
one?
right up there.
Right?
It's right up there. I mean, if you're a guitar fan, I mean, there's this instrumental they did early on called Eruption, and that's sort of the one where Eddie Van Halen really made his mark as a guitarist.
Cool stuff.
And then, you know, covers like You Really Got Me.
Oh, also good.
You know, a few others. Anyway.
Okay. Chart.
It's all about jumping, which would explain the song. And that's what's been happening to S&P 500 earnings estimates. It's something that Michael Purvis over at Tallback and Capital Advisors pointed out the other day. You know, he's looking for the S&P 500 to get to 4,800 by the end of the year. Higher than every strategist that we survey here at Bloomberg.
We're at 43.56 as we speak.
That's right.
That's
So it's a long way up from there. But how do you get there?
Yeah.
Well, in part because of earnings growth. And, he went back and did a year-over-year comparison of what are called forward earnings for the S&P 500. So you're looking 12 months out. You're sort of taking the individual projections and putting them all together. At least that's how we do it. And then you find out that, over the last couple months, you have seen increases of 40% or more. You didn't see that coming out of the recession that ended in 2009. In fact, you haven't seen that in at least 3 decades. That's what our data shows. And the reason why you're getting this kind of recovery in Purvis's view, what he called a huge explosion in profit at those economically sensitive companies, the cyclical stocks. And, he sees the earnings growth story, as he put it, going on through next year, that is going to continue to be robust. And certainly that kind of optimism is reflected in what's happened to analyst estimates over time. If you want to see the numbers, folks, as they're presented in the chart, send me an email. I'll get them to you along with the explanation that goes with it and everything I do going forward. The address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
But we knew they were going to increase, Dave, because they fell off a cliff during the pandemic. So is there some perspective we need to put on this?
Yeah, I mean, if you look at the chart, that cliff was smaller than what you saw back in 2007 to 2009. And considering we only had a 2-month recession, that's a big piece of it. Another big piece is all the trillions of dollars that the government has thrown at the economy in one way or the other. And, companies have been the beneficiaries of that. So, you go back to sort of the bull market that started in 2009. And, in those early days, I mean, you had 38% growth seen in S&P 500, again, on a year-over-year basis. And now we've gotten above that.
That's pretty significant, the bounce back here. And also explains so much in terms of what's going on in the equity markets. That's your chart of the day. What about your stock of the day?
Land's End.
Ah, cool.
The apparel retailer. It's all about their prospects. I mean, their fiscal second quarter ends this month. They've already raised estimates for earnings, estimates for revenue.
They've been on a tear.
They have. And, they're increasing their full year projections as well. And what they're benefiting from is people going back to work and going back to school because they have what they call a business outfitters business. And, it's national accounts and it's school uniforms.
Right.
That's where the growth is. And so you got Land's End shares having reached their highest price in 6.5 years. And they're up more than 15% as we speak.
I've talked with the CEO, Jerome Griffith, recently, and I bought uniforms from them for my daughter over the years. But, that's a company that has gone through some really tough times, but they have really had a bounce back this year.
Oh, yeah, absolutely. And I can't help thinking Land's End, based out in Wisconsin, not far from Milwaukee, they're a winner just like the Bucks of the NBA. At least today.
Tying it all together for us, Mr. Dave Wilson. Check out Dave's Stock of the Day just after 4:15 p.m. Wall Street time. You can find it on Facebook, LinkedIn, and, of course, on Twitter @TheOneDave. Dave, thank you so much. All right, back to Nancy Lyons at a check on world and national news. She's in our 99.1 newsroom in D.C. Hey, Nance.
Hey, Carol. The Senate is taking a procedural vote right now on a still unfinished infrastructure plan. It's likely to be rejected moving forward with debate, but GOP negotiators say the deal is not dead and they'll be ready to move ahead sometime next week. House Republicans say they'll hold their own investigation into the Capitol riot since House Speaker Nancy Pelosi has said no to having GOP Congressman Jim Jordan and Jim Banks serve on the committee. She says they should not participate since they voted to reject results of the 2020 election. Banks says by rejecting him, she's rejecting all Republicans.
This just goes to show how partisan of an exercise we said this was all along. That Nancy Pelosi would take me and Jim Jordan first off of this committee and the rest of us as well by rejecting the first two of us.
Again, Congressman Jim Banks. Lawmakers are taking a look at how extreme heat is impacting the U.S. New Jersey Democrat Mikey Sherrill opened a House hearing today and called extreme heat a clear sign of global climate change.
Temperatures reached 40 degrees above average in some places. causing pavement to buckle, streetcar cables to melt, and at least 193 deaths across the region.
Cheryl says the extreme heat often happens alongside crippling droughts and devastating wildfires. 13 western states are currently dealing with the spread of wildfires, with the smoke making its way to the East Coast and showing up as a milky haze. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy Lyons, thank you so much. Carol Masser in New York at our Bloomberg Interactive Broker Studio. Charlie Pellet of Bloomberg News joining me. Hey, Charlie, we caught up with Eric Schatzker about this as those headlines were crossing yesterday about Tom Barrack, who is maybe perhaps, I guess you could still say, an ally, friend of former President Donald Trump, was involved in his inaugural campaign. And our own Eric Schatzker talked to him just last week, a week before he was charged with those illegal lobbying, the indictment for the United Arab Emirates specifically. And he came to New York, he sat down with Eric and did a wide-ranging conversation.
Indeed, and I think I recall, in fact, I do recall
They were walking around here.
Exactly, and Eric telling us that there were no signs that anything was amiss. But one of the questions that Eric, and they touched on a lot of topics during that conversation, one of the questions that Eric asked of Tom Barrack was, do you have any regrets? And here's what he had to say.
From my simple beginnings of where I came to have the gift and the opportunity to be next to a president of the United States, to have the honor of running an inauguration, to be up close and personal on some issues that affect world order.
And I should add that Matthew Harrington, who is Barrack's lawyer, said his client is innocent, saying that Barrack made himself voluntarily available to investigators from the outset. And Barrack, by the way, now being held in a Los Angeles jail.
Yeah, and as you said, Charlie, Eric asking Tom Barrack, who Eric's talked to him several times, he's been, a frequent guest on Bloomberg, talked about a lot of things, and they talked about his role, too, that he played in Donald Trump's political ascendancies and his presidency overall. And some of the words he uses, anguish, agony, and I highly recommend that people go to the Bloomberg and go to Bloomberg.com to read this story by Eric that really breaks down some of the back and forth in that conversation. You can also hear more of their conversation together. All right, Charlie, thank you so much. You're listening to Bloomberg Business Week right here on Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Crypto getting a lift right now from Elon Musk. Bitcoin up by 6.1%. Elon Musk's love affair with Bitcoin runs deeper than previously known. The billionaire head of Tesla says his space exploration company also owns the digital token and has no plans to sell it. Also, Fed Chair Jay Powell enjoys broad support for his renomination among top White House advisors. That's according to sources speaking with Bloomberg News. But that decision is expected later this year and has not been put in front of President Biden. S&P up now by 29 points, higher by about 0.7%. Today's focus on earnings. We've got the Dow up 253 points, up by about 0.7%. And the NASDAQ Composite Index up 103, higher by about 0.7%. Broad-based rally here. NASDAQ 100 Index up 0.5%. Russell 2000 surging 1.8%. Dow Transport's up by 0.9%. And the Philadelphia Stock Exchange's Semiconductor Stock Index up now by 2.6%. 10-year down 20-30 seconds. 10-year yield 1.28%. Gold down 0.3%. 18.04 the ounce. And West Texas Intermediate crude advancing 4.5%. 70.26 a barrel. I'm Charlie Pellet. That's Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Just about 10 and a half minutes left in today's trading session. It's been an interesting week already, but again, here we are 2 days in a row. We see stocks trading higher after a Monday sell-off. Let's get to it. Drive to the Close with David Dietz, back with us, Managing Principal and Senior Portfolio Strategist at PPAC Private Wealth Management. Once again, on the phone from Summit, New Jersey, $9.4 billion in assets under management. David, so it's been an interesting week. There's been some concerns about the Delta variant. There's concerns about economic growth here in the U.S. peaking. How do you see it, especially as we are just kind of smack in the middle of corporate earnings?
Yeah, absolutely. I mean, you know, if you had taken Monday and Tuesday off, you come in today after Friday, you would have thought nothing had happened when we had a terrible day in the markets on Monday. But now we've got two back-to-back days with 90% up volume and risk assets in favor again. Gee, for me, Carol, I mean, basically, that was that extreme focus on the spike in the COVID cases due to the Delta variant. Got people very worried. We heard about more mass mandates, potential lockdowns, and so forth, plus a plummeting 10-year Treasury yield really spooked investors. But what we've seen here is, with earnings overall expected to be up 70% year over year, the best we've seen in terms of year over year for well over a decade, getting some good reports. People are saying, hey, look at these earnings. These companies are powering through the concerns we have over the COVID virus, and the bond market woke up to that. We went from close to 1.1 to well into our 1.28 area, right. Suggesting that risk assets are back in favor.
Earnings backward-looking, outlooks are not. In terms of what you're hearing on outlook commentary, does it say to you that the growth momentum continues? We expected second quarter numbers to be pretty impressive, correct? I mean, if they didn't come in impressive, we'd really have some problems here. But so in terms of what you're hearing from the corporate community about whether or not the growth continues the second half, does it give you enough confidence to say that the run-ups that we continue to see in equities make sense?
So, that really is a great question because, the problem with announced earnings is they are in the rearview mirror, and investors really care about what is going to happen going forward here. But, on balance, one of the things we're looking at is the amount of cash that's on corporate balance sheets now. It's huge, biggest since about 2018. And we also like the fact that a lot of buybacks are being announced. So, for example, Prudential just sold a division. They're going to buy back about 11% of its company in the next 30 months. Stuff like that gives tremendous support. And what we like about that is that shows confidence that they're not going to need that cash for a crisis going forward. It shows confidence in the current valuations of the stocks. And I think it gives investors confidence that there's some sort of floor under the market.
Right, but it's not like they're putting it to building new facilities, hiring more workers, giving workers pay raises that trickle down into the economy, David. Come on, you know that.
Well, that's true, but I've got my investor hat on here, and sometimes you like it when companies are not pie in the sky in terms of what they can do with the money in terms of expand their business. They're taking a very measured approach, which actually may be the best from an investing point of view. It's great to expand if you know the demand's going to be there, but if you have some expansion, some return of capital, historically, that's been best for stock prices.
What does it mean, though, for easing some of the supply chain problems? If companies are not willing to maybe step up and boost what's needed to meet those supply demands, or if they don't get those workers back, how much of a kind of drawdown or pullback will that create on the system that might then pull in some of the economic growth expectations and realities?
Well, that you just touched on a key worry going forward, but I think you have to analyze what are all these bottlenecks due to, and it's a myriad of factors, but I would submit that one of them is the fact that a lot of potential employees are hesitant to go back to work. All sorts of small businesses in our community are having trouble finding employees. We know with the high unemployment rates that they're out there, but what's going to make them go back? Well, I think the opening up of schools, I think perhaps when supplemental payments from the government start to wane. I think also when we can finally get COVID better under control, knock on wood, please everyone get their vaccines done. I think that's going to help the bottle change right there. And of course, some of it is global supply chains and easing of COVID there is going to help too.
Just want to mention a headline crossing the Bloomberg terminal. We were expecting the Senate Republicans blocking the start of a debate on infrastructure. The Republicans want to finalize a bill before starting that debate. Chuck Schumer, of course, Senate Majority Leader, can call another vote to debate the bill next week. They were currently voting on the motion to invoke cloture on the motion to proceed with that massive infrastructure, wide-ranging infrastructure bill known as H.R. 3684. We're talking about aid for highways, safety programs on highways, transit programs, and others. But again, Senate Republicans blocking that start of a debate on infrastructure. Hey, David, that has been, I think, one of the other macro trends that we've been watching if we're looking for things to provide some stimulus to the economy and even the financial market trade is infrastructure, which I'm kind of tired of talking about because how many administrations do we have to talk about before whether or not we get something done? Ultimately, do we get something done in your view?
Yeah, I do. I think there's a general consensus that your basic traditional infrastructure, roads, bridges, and things bring the internet to everyone will get done. I think what the market kind of likes here is the talk about how to pay for it seems to keep being put off. People like my daughter say, why worry about budget deficits? It doesn't seem to matter here. And so I think tax hikes are not going to be anytime soon. And so basically, again, that's a positive tailwind for the market. More government spending and the risk of higher taxes spoiling the party seems to be receding a little bit, Carol.
All right. So where would you commit new money right now?
Hey, we still like tilting to stocks. I mean, here's the number one thing to know. The dividend yield, the S&P 500 is 1.35. It's rare that it's above the 10-year treasury, which means over the next 10 years, you're going to get a lot more income in stocks. And then among stocks, we would tilt towards value. Now, why would we do that? Is because valuations are so much favor value versus growth. Now, always, since growth stocks generate earnings faster, they have higher PEs. But in this case, they're about 12 percentage points higher than growth in terms of price to earnings ratio. That's 3 times what we normally see. Yet actually, growth in terms of earnings on growth stocks isn't projected to be that much more than value stocks over the next 5 years. So I think that value offers you better opportunities. So don't forget that sector of the market.
So names you like: Verizon, Viacom, CBS, Schlumberger, Wells Fargo.
Yeah, so Schlumberger, Wells Fargo, traditional reopening stocks. I think as the world reopens, you have more energy demand. Schlumberger is your blue chip in that area. Wells Fargo, of course, is one of your best bank franchises, trading not too far above book value, coast to coast. They're cleaning up some mishaps over the past couple of years, so that's going to take advantage of ultimately higher interest rates. Viacom, CBS, they're in talks to perhaps partner up with Comcast streaming overseas. Now, Carol, is that a first day or something that is going to go a little further? Verizon just reported today great growth in subscribers. If you want a 5G play, which is with a good dividend, you can't go wrong there.
Got to run. David, thanks. David Dietz, Managing Principal, Senior Portfolio Strategist at PPAC Private Wealth Management, on the phone in Summit, New Jersey. All right, we're getting ready to go Beyond the Bell. We're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, counting you down to the closing bell on this Wednesday. This says equities are pretty much going to close at their best levels of the session. You are listening to Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs, counting you down to the closing bell, here to help take us beyond the bell. Carol Master joining us right now. Tim Stenovic still off in space, apparently, bringing together our Bloomberg television, radio, and YouTube audiences. And Carol, this is quite a day here. We're seeing pretty good breadth, similar to yesterday here, a market that seems to be on the verge of trying to erase some of the losses that we saw over the previous session.
It's like, I said this yesterday, almost like Monday never happened. Tim is coming back down to earth. We should see him back apart, our team, tomorrow. What's interesting is the earnings numbers, right? It's a market that's very much driven by earnings estimates, and we're seeing a lot of companies topping those estimates. Reporting season, and especially when you look at technology and real estate sectors, they're among the biggest winners, Caroline.
Yeah, we brace ourselves for Texas Instruments coming out after the bell, as well as Whirlpool. Really interesting narrative we're going to get there in terms of supply chain issues, in terms of chip stocks. I think that was something that really drew my attention earlier today. Daimler, as well as some of the other key car makers, really saying this chip issue isn't going anywhere soon, and some of the supply constraints and inflation really putting in the narrative in some of these company earnings.
And I think the key thing for me this earnings season, Romaine, that's different from last earnings season is the confidence in the forward guidance. Verizon, J&J, United, Coca-Cola, the list goes on, where if you have CEOs coming out, they're confident, they can forecast, and they're raising the guidance. And it is the certainty that we have not had in the last previous quarters that catches my attention.
And that's a good point. And it's not only the numbers they're giving out, but even the commentary that we heard from them. That's definitely a lot more definitive here in providing forecasts in a way that we didn't get the past few earnings seasons, where a lot of CEOs and CFOs really wanted to hedge their bets here. And that's probably why you're seeing a lot of green on your screen right now for those of you watching as we get the closing bells here. The Dow Jones Industrial Average, 34,800 and change. That's up about 289 points, 0.8%. The S&P 500 up 36 points, also about 0.8%. The NASDAQ Composite right now up 133 points, about 0.9%. But your outperformer here for a second straight day is the Russell 2000, the small caps. Looks like they're going to finish the day higher by about 1.8%.
Yeah, those are your traditional assets. What about Bitcoin? Because it went above 32,000, up almost 10% at its highs today, settling up about 6%. Thank you, Elon Musk again, the Elon Musk factor. He said his space exploration company also owns the digital token and has no plans, Taylor, to sell it.
It is a Caroline store of value kind of day with Bitcoin higher. Let's take a look at where we're at on the sector levels within the S&P. Some winners and some losers. And the good news, if you're long in the market, is there is a lot of green within the loser sector. But it really is a bond story with that reflationary trade back in vogue. A lot of the underperforming sectors are those that typically do well when bond yields fall, like utilities, like real estate. Those are off anywhere from 0.3% to a full 1%. We migrate higher, and Carol, I will end on the gainers just for you. It's a green kind of day. It is energy, it's semiconductors, it's banks, it's dividends, right? It's that reflationary trade, higher yields that are back in vogue.
Yeah, that was definitely part of the trade and earnings. That was really, I feel like, the two big stories today. Let's go to earnings first of all. Chipotle up 11.5% in today's session. Sales beating, comp sales beating, restaurant margin all beating despite higher menu prices. So that was an outperformer. Netflix, that was one of your top down names in the S&P and the NASDAQ. Tepid third quarter new subs. We were talking about it yesterday.
I think we're seeing Texas Instruments cross the wire right now.
Yeah, let's get to it. Texas Instrument crossing the Bloomberg terminal. Obviously, a closely watched chip name. Let's get to it. And let's get to the forecast. That's what everybody wants to know about. Sees third quarter revenue, $4.4 billion to $4.76 billion. So the estimate out there is $4.59 billion. So we'll see how the street reads that one. As for the second quarter revenue, $4.5 billion, 4.6 almost. That's a beat, Caroline. Second quarter EPS also beat, $2.05 a share versus $1.48. That's year over year comparison. Stock down though, 3.2% in the aftermarket.
Always notable with Texas Instruments and all these chip makers, of course, is going to be the desire to see demand, how much longer we see demand, much longer we see supply chain issues. ASML over in Europe, of course, a key equipment maker, was saying there is just so much hunger to be getting into redefining the supply side when we have such a torrent of some demand on the other side. But really, we're awaiting, of course, also Whirlpool, which is a key user of chips. And as many realtor or real estate broker will tell you, there's many an issue when it comes to washing machines into your new houses.
And it's interesting, too, that for all the bump that Whirlpool had over the pandemic here, analysts were really kind of bearish on this stock for quite some time. And they've actually turned even more bearish on the industry, basically saying that the peak for a lot of these home appliances and other sort of supplies that people have been buying, that might be beyond it. Then you throw in some of the supply chain issues and all the other inflationary issues here, saying that the bloom may come off the road. So it'll be interesting to see what kind of commentary we get out of Whirlpool, specifically with regards to the persistence of some of these sales, and more importantly, I guess, with regards to what they have to pay to make and ship this equipment.
We're talking global, of course, global revenue streams coming in different FX, of course. And let's go to FX as I speak. We had an interesting day. For once, the dollar went lower, not that desire to get into that haven that we've seen for the last couple of days. We saw the dollar go low, we saw the Japanese yen as well, that other key area of sort of safety in the last few days has actually been on the downside. Japanese yen off by 0.4%. British pound actually finally catching a bid. The Canadian dollar up 0.9%. Why? Because oil is getting a bid. Let's go across the commodity space. Brent crude up 4%. Remember, sold off by 7% on Monday. We're slowly clawing back those gains. $72 where we finished with Brent crude. WTI crude also at $70 a barrel. Money coming out of steel though. So interestingly, China pushing back perhaps against some of the run-up that we've seen in certain parts of the commodity space. Coffee though, we all know it. Arabica beans, as Ramin will tell us, they're still on a run. The freeze is the issue.
That's the good kind, sweet kind.
It's the sweet kind that Starbucks likes. Meanwhile, sovereign bonds, actually yields rising globally, Taylor.
Indeed. It is a yield rising kind of day for the second straight day after the big rebound of Monday that Romaine missed. Take a look at what yields are doing. We mentioned the sloppy 20-year auction, given the concessions that we are now 30 basis points lower in the last month than the last time we came to markets. You're looking at 5, 6, 7 basis points higher really across the curve at a 129 on the 10-year, a 193 on the 30-year. Still, as we remain really, really low on an absolute basis, though the relative basis can always be argued. I do, Carol, want to get back to some of the earnings because we were having, just that interesting conversation about that forward guidance that is really providing some support for the market at this point. Yesterday after the bell, this morning, and again as they further trickle out too, the confidence that these CEOs have that they may not have had a few quarters ago.
Yeah, absolutely. And they're dealing with a lot of big macro issues, and that includes something like infrastructure. And we do have a headline: lawmakers say they are close to a final deal on infrastructure. This would be massive spending, private-public partnerships, and that could certainly give another thing, Romaine, that gives some juice to the economy.
All right, Whirlpool earnings are crossing the wire. The company apparently raising its full-year guidance here. Here are your 2Q numbers. So on an ongoing basis, 664 Street was looking for 590 on the EPS. On sales, 5.32 billion. Street was looking for 5.03 billion, and the company is raising its guidance. Not quite sure exactly what the hard numbers are on that guidance, but that is the main headline here. It looks like a beat and a raise for Whirlpool.
And of course, going back to Texas Instruments, of course, key chip makers seeing their third quarter revenue 4.4 billion to 4.76 billion. That was basically in line with what analysts had been expecting, but the company had been falling after hours post that earnings report, of course. This, as we see, continued analog revenue coming in slightly ahead of expectations, but Texas Instruments, the one to watch post their numbers, and the CEO saying they saw strong demand in industrial and in automotive as well. This was really being voiced by Daimler earlier, the maker of Mercedes, Taylor, that was really saying they see this chip issue, the supply chain issue running into 2022. They are having to curtail their overall supply that they think they can bring to the market, the sales that they would have made in their cars, because they can't make them.
Yeah, I'm glad that you brought up the comment by the CEO, because I'm a little disappointed there's not more commentary within the press release. We've dug through the whole thing, and Caroline, that was pretty much it in the first paragraph. They talk about returning cash to shareholders through dividends and repurchases of about $3.9 billion in the last 12 months, and looking at dividend as a percent of free cash flow. But I kind of, Carol, wanted some of the more juicy stuff.
Well, what's interesting is we just had David Dietz over at PPAC Private Wealth Management on, and he said this is, one thing that will help support the market longer term, and that has to do with investors having a lot of cash on hand, and corporations having so much cash on hand that they can do buybacks, and that should provide some support when we start to see some momentum remain running out of the market.
And I really feel like this is going to be key over the next few months. And you touched on this, Caroline. I mean, obviously, Texas Instruments makes a lot of chips. It goes across a lot of different sectors here. But I think when you look at what's going on in the semiconductor industry, that's really going to extrapolate out to so many other industries and what type of earnings we see out of them going forward over the next few months.
And what about capital spending? Remain your favorite topic, but they're all giving the money back to investors.
Yeah, well, Texas Instruments, to their credit, they are trying to invest here in the U.S. and building out a few plants here. It'll be interesting to see what the follow-through is on that.
Carol, I have to say that is the key point that Gina Martin Adams made of why isn't the CapEx coming back? Is it uncertainty, and have we gotten through that period of uncertainty?
Or paying workers more, or hiring more workers, right, which provides some momentum in the economy. CSX, by the way, it is up about 1.4% in the after hours, so that's following their earnings numbers.
Do you care about Las Vegas Sands? Another loss there. Nobody's going back.
Are you going to Vegas?
No, no
splashing the
really.
cash.
I want to live.
Are they up in the after hours?
No, they're down.
Okay. All right. Good to know. All right. That's going to do it for our cross-platform coverage. They're down, in fact, about 0.8%. That's going to do it here on Bloomberg Radio, Bloomberg TV, and on YouTube. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So we do have a lot of earnings out here after the closing bell. Las Vegas Sands, they are down about 1.9% in the after hours. CSX also out with their numbers. They're up 1.4% in the after hours. TXN, Texas Instruments, we were just talking a lot about the chip sector, the semiconductor sector, something we talk about a lot in terms of supply constraints, lack of demand, impacting different industries because they can't get the chips that they need to make their products, down 3.3%, though. Texas Instruments here in the after hours, talking about its third quarter revenue outlook. The outlook's so important, what the street wants to hear about, and they're talking about third quarter revenue of $4.4 to $4.76 billion. The street estimate is $4.59 billion. So again, that stock a little bit lower in the after hours. All right, let's get back to world and national news. For that, over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Republican senators have blocked today's procedural vote on the bipartisan infrastructure plan. But despite the setback, GOP negotiators say they will continue working with Democrats to craft details of the bill. House Republican leader Kevin McCarthy says Republicans will not participate in the Select Committee charged with investigating the attack on the U.S. Capitol. He says House Speaker Nancy Pelosi is abusing her power by rejecting two of McCarthy's picks, Congressman Jim Banks and Jim Jordan. Pelosi rejected them because they voted against certifying the election on the day of the riot. One House Republican, Liz Cheney, will serve on the committee and defends Pelosi. She says Republicans were the ones that rejected an earlier call for a bipartisan committee with equal powers.
We supported what would have been the very best option, which was a bipartisan independent commission. The minority leader opposed that. He lobbied against it in the Senate, and the Senate blocked it.
Cheney says McCarthy's comments are disingenuous. President Biden is putting cybersecurity on his agenda this summer. Bloomberg's Nathan Hager reports.
The president will host industry leaders at the White House next month to discuss the wave of ransomware attacks that have targeted energy, food, hospitals, many of them tied to Russian and Chinese government-linked hackers. A spokesperson for the White House National Security Council says the meeting is set for August August 25th. There's no word on who exactly will be attending or any further details, other than it'll include members of the president's national security team and other administration officials. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now back to you, Carol.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Headline, as we just mentioned a moment ago, the bipartisan group of senators working out details of an infrastructure package say they, quote, have made significant progress and are close to a final agreement. Let's get a little insight into this. Joe Matthew, host of Bloomberg Sound On in our D.C. newsroom. So, Joe, what does this mean?
Well, if only they had done that a couple of hours ago.
I was just going to say, wait, we just had this vote. Help me.
Right. Well, you know, I was just saying a little while ago, this is why people hate Washington. I hate to say it, but you've got a self-imposed deadline to vote on a bill that has not been completely written yet. Republicans said, not a chance, we're not going to do it. You and I knew this was going to fail today, and of course it did. 49, 51 nays, that's the end of that. For now. We could get a deal today, we could get a deal on Monday, we could get a deal tomorrow, nobody knows. But because the deadline's self-imposed, Chuck Schumer can move it to wherever he wants. We could be voting again and doing this very same thing on Monday, remembering this was not the final up or down. It's only really the path to begin the debate on this. And this is how the sausage is made.
Well, and the Republicans blocked the vote to kind of do it quickly, correct?
Yes, that's correct. So now it's back to the drawing board a little bit for Chuck Schumer, but once there's language, you could see a little bit of a break in the emotions around this whole thing when people say, okay, look, we got a number on bridges, we've got a number on roads, we've got a number on broadband. Then we can start warming up to this. Of course, not all Republicans have to vote for it. We get 10 and this thing is off to the races here, and we begin debate on what will be the first phase of this. But I'm going to throw another layer on for you, Carol, and that's the debt ceiling.
Right.
You like self-imposed deadlines? We got another one. That's going to be up the end of this month. And Mitch McConnell, the Republican leader in the Senate, says, I'm not going near it. Put it in the reconciliation bill, because you are already spending too much money.
God, I feel like I've seen this movie before.
Yes, you have. And the reconciliation bill is going to balloon to be potentially even bigger if that happens. So we're stuffing a lot of stuff into this reconciliation bill. I'm wondering how much is going to be left in the bipartisan bill.
So I play chess, a lot of calculus to playing that, a lot of strategy. Did the Democrats screw up here by not being more clear, more together in terms of infrastructure so that they wouldn't have had this Republican bloc?
That will take a minute. I'm sure Chuck Schumer would say no, that he actually forced people to show up and vote up or down on it and light a fire under the negotiators to write a bill, which really seems to be what his aim was here. Because we could have been waiting till September for this to be done.
All right.
It's not done yet. Hopefully it will be in the next few days.
All right, net last question. Should we assume that, okay, as we said, kind of Washington as usual? So it's not like it's gone away, it's dead. It's not a dead issue. So it's at least kind of going through the normal churn. So we should expect something, or is it hard to tell at this point?
Well, I think I would expect something on the bipartisan bill. And those Republicans and Democrats who've been behind this have sent a letter to the leadership saying, look, we're going to have something ready for you. As you said, there's a group of problem solvers, including 10 Republicans, who say we will vote on Monday if you get this done in time. So there's going to be a take two on this. And my thought is a couple of weeks down the road, Carol, people won't even remember what happened today.
I don't remember
After all this.
Who are you? Who am I talking to?
Yeah, that's right.
All right, Joe Matthew. Check him out on Sound On. That's coming up at 5 p.m. Wall Street time right here on Bloomberg Radio. Let's get back to your top business story. A lot of earnings after the closing bell. Here is Charlie Powell.
All right, thank you very much. Let's focus on Texas Instruments. Shares down by roughly 3% after its earnings report. TXN, Texas Instruments, saying it sees third quarter revenue in the range of $4.40 billion to $4.76 billion. Estimates there have been for $4.59 billion. We saw an up move for stocks today. The Dow, the S&P, NASDAQ all advancing. Late day rally right into the close there, with the S&P advancing 0.8%. The Dow also up 0.8%. NASDAQ up 0.9%. Stocks climbed as a slew of solid corporate profits took the focus off of concerns about the economic impact of coronavirus flare-ups around the globe. Among today's standouts after earnings, Chipotle Mexican Grill up today by 11.5%. Netflix, though, headed the other direction, down by about 3.3%. S&P up 35, up 0.8. 10-year yield 1.29%. 10-year down 21/32. Gold fell 0.4%, 18.03 the ounce. Bitcoin, big story today, surging by 6%. Bitcoin soared after some prominent voices, including Elon Musk, discussed prospects for the digital currency. We've got gold, as I mentioned, down 0.4. West Texas Intermediate crude rallied 4.5%, 70.23 a barrel. I'm Charlie Pellet. That, Carol Massar, is your Bloomberg Business Flash.
It is indeed. All right, Charlie, thanks. So we talked earlier with our Cynthia Coons about how we need to be ready to deal with more COVID variants coming. Gene sequencing is what we got into. Our Bloomberg Intelligence farmer team has come out with some new research noting that the Delta variant may warrant a new COVID vaccine to combat the higher infectivity and potentially worse disease outcomes of the variant. So let's get to it, because when I read in this morning and when I look at the Bloomberg right now, the most read stories in the past 8 hours, 7 out of 20 have to do with the Delta variant and COVID. 6 of them are related to this Bloomberg Intelligence research. Let's get to it with Bloomberg News. Is Drew Armstrong. He's a senior editor for U.S. Healthcare, and he joins us in our Interactive Brokers studio. I can't read my own writing. That's really bad. It's been that kind of a day. This research is pretty phenomenal. Reading in, Drew, I'm not surprised because we're all kind of nervous and trying to understand the Delta variant. Tell us a little bit about what we need to understand about it right now.
Yeah, I think, a couple of kind of just fundamental points. We know that these viruses evolve over time, and some of these ways that they evolve can be, not particularly consequential for
normal
us.
Flu virus,
yeah,
right?
Everything. These viruses are mutating every single time they replicate in your body. They are a highly, they mutate very fast, happens all the time. Very few of these mutations actually matter. A lot of them make the virus so it doesn't even function properly, and it just, this is random chance. You're basically spinning the roulette wheel every time from a genetic standpoint. But some of them do matter, and we have these things that are called variants of concern. The Delta variant is kind of the one of the latest and greatest of these. And if you're a virologist or an epidemiologist, one of the things you're talking about is this concept of vaccine escape. Does something about the virus change in a way that it makes it so that the immune response that's kind of sitting there in your body, ready and waiting, is no longer, effective, or is no longer as effective? And keep in mind, all this stuff is kind of on a spectrum, against, a certain type of mutation of the virus. And then does that allow the virus to, that version, that mutation and strain of the virus to kind of spread and be more fit and capable in a population? And so that's really what you're worried about. Now, the good news when we talk about that is that, just as viruses can evolve, so can vaccines. I mean, we come up with new flu vaccines every single year.
Right.
There's already been talk about, will we need some kind of, variant booster for this particular coronavirus? And so I think that's a discussion that's underway right now, and looking, how good is the protection, and do we need to tweak things in some way or another to attack this particular variant, or what is the virus going to look like in the future?
Can a variant in a virus, you talk about a spectrum, so can someone who's gotten a vaccine, though, I mean, it can affect all of us differently, right? Even as a mutation, or is it, can we say, this is the mutation, this is how it's going to affect you?
That's exactly right. I mean, I think the way to think about it is that this is not a binary question where a vaccine either, works or it doesn't work. It's more of a question of, well, okay, this vaccine, let's say, was 95% protective, against symptomatic illness or anything worse than mild illness in the original strain. Well, the strain evolves, and now that vaccine is, 80% protective.
Still good.
Which is still good, but, it may be less protective. Or it may be that, for example, hey, you have a larger number of people who, they get infected, but their infections are very mild. I just had a friend in Los Angeles. He had both doses of Pfizer back in April. He got COVID. He doesn't know what variant it was. But, listen, he was sick, and it wasn't fun, but, he was over it in a week or something like that.
Was it in the hospital?
No, was not in the hospital. And so I think, and who knows if this is the variant or some original strain, but I think, we really do have to think about this as a spectrum of protection where it's never going to disappear entirely. It's never going to be perfect. And where are you on that range, both against protecting against infection entirely, protecting against more severe diseases, and so on and so forth.
How quickly are they tracking all the data about the variant to understand whether or not the vaccines are going to kind of stand up against it as it continues to mutate? Like, will they know instantaneously because they're tracking populations, or will there be a lag? Or
no, this stuff takes a while, and that's one of the real challenges here is that viruses mutate faster than vaccines evolve. And so one of the reasons that I think the flu vaccine tends to be relatively, I mean, it works, but it's obviously people still get the flu. It tends to be about 60% protective is something you're looking for generally with the flu. That's kind of what you can expect there. Part of the reason is that when you're making vaccine and you're making vaccine at a mass scale, as we saw with the COVID vaccines, you're doing this months and months in advance. And so with flu vaccines, for example, you're trying to predict, hey, what strains of the flu are going to be circulating most predominantly by the time, they have to guess a year or so out and say, okay, we think it's going to be these 4 strains. And sometimes they guess really well and the flu vaccine is great. Sometimes they don't guess so well and it's only moderately protective. The same dynamic may eventually come into play with this.
But we don't want that miss on COVID, right?
Right, exactly. And so, listen, the flu and COVID are very different viruses. It's worth keeping in mind. This is, a virus that it may be that that a vaccine, these mRNA vaccines, they might be very effective. It might be that, if you end up doing a booster shot or something like that, you end up with very long-lasting protection, against almost all strains of this. I think this is a question that is one, it's being looked at, but it's still an open one exactly on whether we truly will need a new type of vaccine or a slightly modified vaccine, if we'll need a booster, or if we'll just be, say, hey, we've got 80% against all the strains out there with the mRNA vaccines. That's pretty good. We don't know if we can get any better by giving more shots or modifying the shots.
So we don't know yet about a booster. Like, I keep thinking, do I have to circle some date on a calendar?
No, I think we really don't know. I know, Pfizer has been talking it up. The U.S. government has been talking it down. I think the reality is that, the question is still out there from a data standpoint in terms of, how much does immunity wane? The immunity has a lot of different parts to it. Is it just these antibodies, which are kind of the live active defenses that are circulating versus kind of the immune memory cells that are a little bit more dormant but a little bit more permanent? I think we really do not know yet exactly what long-term immunity for these vaccines looks like because, they've not been out there for that long. They've only been in people's bodies for around a year. I mean,
this is the one thing to the rush, right?
So yeah, exactly. So we don't know. And I think that's very, very important. There's going to be a lot of data that is going to come out over the next couple of months. Some is going to go in one direction, some is going to go in another. What I would encourage people to do is, try to take the totality of this information as it comes out, because you're going to see headlines that point one direction and the ones that point the other. It's not that it is changing back and forth. This is the argument of science happening live in real time.
You have been covering all of this stuff in real time, and I know how exhausted you must be over the past year and a half. When we start to see, though, LA wear a mask, we have conversations here in the office like, throw on a mask, it doesn't hurt. How are we as the general public supposed to read that when you also say these vaccines are really effective and they do protect us?
I think the mask debate in this country is going to be really interesting to watch. I don't think anybody really wants to go back. If you're, listen, as someone who's vaccinated, I hate wearing a mask. It sucks.
But do you wear it?
I do on planes, on the subway, and things like that. I wear it where I have to wear it, and I wear it in a couple of situations. When I'm around people I don't know or something like that.
Right.
Yes, but not very often. And I don't want to. I don't want to have to go back to that. It is, it is not
like
something that it's not something I want to keep having to do. And so I think, and trust me, I'm very much on the pro public health measure side of this. I follow this stuff, and I wear my mask diligently. I think it's going to be very hard from a political standpoint and a public health messaging standpoint to reenact mass mandates again, because it's hard to go back to that world for people, especially if they've been vaccinated, and people are going to have a reset risk calibration, I would expect, a little bit, and figure out what their level of comfort is.
Sit tight, we're not done with you. We're going to pick your brain a little bit more, because I do also want to ask you about data sharing, because I do think that is so crucial as a world in us getting ahead of it. And I also want to find out about your next variant watch, because my understanding is we're going to go through the Greek alphabet. We are talking with our own Drew Armstrong. He is senior editor for U.S. Healthcare here at Bloomberg News. He has been all over COVID, the vaccines, and as we get these variants here at Bloomberg. All right, you're listening to Bloomberg Business Week. Just a reminder that we finished pretty much at our highs of the session, a slew of earnings. Dow up 286 points, S&P a gain of 35, and the NASDAQ up 133 points. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, this is Bloomberg Business Week. Carol Masser in our Interactive Brokers studio. We're going to get back to our senior editor for U.S. Healthcare, Drew Armstrong, here in our studio, breaking down some research by our Bloomberg intelligence team and just keeping track of that Delta variant. We'll get back to him in just a moment. First up, though, Charlie, a lot of news, a lot of earnings news
Lots
after
of
the
earnings,
close.
and we are all over. We love earnings season here at Bloomberg Radio, and let's get right to the numbers, and here's what's going on. TXN, Texas Instruments, shares down by just about 4% right now in extended trading. TI giving a wide range for its revenue forecast in the current period, indicating uncertainty about whether a jump in chip demand caused by the pandemic will continue. Right now, Texas Instruments down 3.73%. Whirlpool reported ongoing earnings per share for the second quarter that did beat the average analyst estimate. Tenet Healthcare shares down roughly 7% post-market after its quarterly report. CXX shares jumping 3%. The railroad's operating ratio for the second quarter, that's a measure of the railroad's ability to keep a lid on costs as revenue grows, significantly beat the average analyst estimate. And Discover is boosting its quarterly dividend to 50 cents a share from 44 cents. Estimates on the dividend have been for 47 cents. A move higher for stocks today. A lot of the gains coming in the final couple of minutes of trading. We saw a slew of solid corporate reports that boosted sentiment today. Also took the focus off of concerns about the economic impact of coronavirus flare-ups around the globe. David Dietz is senior portfolio strategist at PPAC Private Wealth Management, and he was our guest right here on Bloomberg Business Week.
If you had taken Monday and Tuesday off, you come in today after Friday, you would have thought nothing had happened when we had a terrible day in the markets on Monday. But now we've got two back-to-back days with 90% up volume and risk assets in favor again.
S&P up 35, up 0.8%, extending the year-to-date gain now to 16%. The Dow up 286, up 0.8. NASDAQ up 133. The NASDAQ Composite Index up by 0.9%. Broad-based gains. NASDAQ 100 Index up 0.8%. Russell 2000 up 1.8%. Dow Transports up by 1%. 10-year down 20-30 seconds. A 10-year yield 1.29%. Gold down 0.4, 18.03 the ounce. West Texas Intermediate crude up 4.6% at 70.28 a barrel. Quick check again of Texas Instruments after hours, lower now by 4%. I'm Charlie Pellet. That, Carol, is your Bloomberg Business Flash.
It is indeed, and we'll be watching all of that tomorrow. Let's get back to Drew Armstrong. He is senior editor for U.S. Healthcare here at Bloomberg News, and we were talking about the Delta variant, a bunch of great stories and research on the Bloomberg as we speak. So you and I were talking in the break about some of the things we wanted to get to, and I feel like we keep hearing, Drew, increasingly from global leaders that in order to get through this, we have to have a global solution, and there's got to be sharing of information, sharing of data. It isn't really happening, is it?
No, I mean, I think one of the really challenging parts of the vaccine rollout within the context of the pandemic is that you've seen programs like COVAX, that's the WHO and Gavi organized program to kind of buy vaccines and distribute them, equitably across the globe, but really, trying to figure out a way of getting vaccines to lower income nations. It has just abysmally its start has been abysmal. I mean,
hasn't worked.
Has not worked. Has gotten very few vaccines. Has done. Has not been able to get them to lower income countries, particularly in Africa, where listen, people were complaining about a 50% vaccination rate in the United States. It's 1% in Africa, and they're having deaths spike in those places.
We need to be concerned about these hotspots. Like I think there are people listening like, that's far away from me. But I also remember back in December, January of 2020, we're like, China, that's far away from me. It's never going to touch us, and here we are.
Yeah, I mean, listen, unvaccinated populations are pretty effective, breeding grounds for new variants, and we've seen what happens when a variant evolves that is successful and kind of leaping around a vaccine or is very effective at hitting, unvaccinated or vulnerable populations. And so, yeah, I mean, just from like a purely selfish standpoint, it's a good thing. Like we all get on airplanes and travel around the world and, go to these places, or people come from these places, and, virus doesn't really care about income or borders or anything like that.
We've got the Delta variant is much more contagious, right? That's certainly something we hear. I was talking with a doctor yesterday, and they said, yeah, but it's not like your outcome is worse, meaning if you've got the vaccine, you're likely to get through it. Are we likely to get to a stage, especially since a big part of the world is still not vaccinated? They are available hosts to continue the variations in COVID. Are we likely to get to a mutation that is not only more contagious, but more a killer?
It's hard to know. I mean, I think one of the general rules of viruses, you know, in a big picture sense, is that like a very effective a virus that kills its host very quickly is not a very good virus because it makes it harder for, you know, it makes it harder for it to spread. I mean, Ebola is really, really scary, but as a virus, the reason it tends to say relatively self-contained is because it kills people too quickly before they can, you know, end up walking around and spreading it to lots and lots of people. It's very scary for healthcare workers. It's very scary if it's happening in your village, you know, but there's much less risk that, you know, someone gets Ebola and then has you don't have a mild case of Ebola that you're walking around with infecting lots and lots of other people. So, you know, yeah, I mean, this question of, you know, the global issue is a real one. And you know, the failure of richer nations to effectively contribute to COVAX and other ways, you know, and really help push vaccinations in other places. I mean, that is meaningful. And then you mentioned some of this data sharing stuff. I mean, I think another real issue that is going to come up over and over again and is going to be, I hope, a point of consideration after this, you know, pandemic ends is, you know, we do need probably a better system of surveillance and monitoring and fast action from a global standpoint, because I think you really saw and have seen over the course of this pandemic, you know, what happens when countries don't share information as rapidly as they might otherwise, you know, and now we're trying to track variants, and, you know, I mean, that is still a system that's kind of in its infancy in terms of, you know, growing up and having global, you know, genetic surveillance of these viruses.
When you wake up every morning and there's a ton of headlines when it comes to COVID and the vaccines and the variants, I mean, what is it that you're always looking for top of mind?
I think, you know, we're kind of at the point in this where it's, you know, I personally am really more thinking about the kind of the long outcome here. I think there's new fresh headlines every day, you know, really, but though, you know, the main thing I think we're keeping an eye on right now is, you know, where are people getting sick and why are they getting sick? You know, and be they vaccinated or unvaccinated, what do we really know, and what can we find out more to learn and add information about, you know, how effective these vaccines are, how the virus is evolving. I mean, those are the things that we're really paying attention to, because, you know, all that points to a time when, you know, what is the, you know, hopeful end point of this pandemic, you know, if there is one, or do we just end up kind of in a long tail endemic situation where we're dealing with this virus and living with it in some way or another for the rest of our lives?
Which is very possible.
Yes.
All right, gonna leave it there. Thank you so much. It's what I wanted to do today, so thank you so much.
Happy to.
I know you're a busy guy. Drew Armstrong, he's our senior editor for U.S. Healthcare right here at Bloomberg News. Check him out, his work on the Bloomberg Terminal, also at Bloomberg.com. Drew, thank you so much. All right, you're listening to Bloomberg Business Week. We're going to talk cars with Hannah Elliott. We haven't talked to her in a while, so looking forward to that. Great way to wrap up on this Wednesday. Right now, though, a check on World and National News with Nancy Lyons. Hey, Nance.
Hey, Carol. Senate Republicans rejected an effort this afternoon to begin debate on a big infrastructure deal that a bipartisan group of senators brokered with President Biden. But supporters in both parties remain hopeful of another chance in coming days once the details are fleshed out. Harsh words from House GOP leader Kevin McCarthy after Speaker Nancy Pelosi rejected 2 of his 5 choices for a select committee to investigate the January 6th riot at the U.S. Capitol. Pelosi says she had concerns about the statements and actions taken by Congressman Jim Jordan and Jim Banks. McCarthy says Republicans will form their own team to investigate.
House Democrats must answer this question. Why are you allowing a lame duck speaker to destroy this institution? This is the people's house, not Pelosi's house.
McCarthy made no mention of the fact Republicans rejected an earlier attempt to create a bipartisan panel with equal powers. Members of Congress have been hearing today about the impacts of the extreme heat scorching much of the nation, but lawmakers seem to disagree about the severity of the problem. One Republican says progress has been made in combating the effects of extreme weather, but the subcommittee's chairwoman, Congresswoman Mikey Sherrill, says it's likely we're seeing an undercount of those who die from the heat.
Extreme heat is the deadliest natural disaster, killing more people than floods, tornadoes, and other extreme weather events combined.
Cheryl says urban communities are especially at risk since they have more pavement that can raise the temperature by more than 10 degrees. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much, Nancy Lyons. So, Carol Masser. Joining me once again is Charlie Pellet of Bloomberg News. Charlie, summer travel season off and running. I've heard so many stories of people who got to the airport 3 hours ahead of time, got there, thought it should be a breeze, only to miss their flight or just barely make it, or to find that it's been rescheduled.
Indeed. Even in the best of times, travel is fraught with issues, but this summer has been unbelievably different. This based on reporting, by the way, I should add, from Dow Jones and Scott McCartney's summer storms, always leading to cancellations, missed connections. That was obvious this past week. This year, though, we've had the lack of empty seats, spare planes, pilots, flight attendants that has left some travelers, in some cases, waiting days to get to their destinations. I lived this firsthand this past week. I've got an 18-year-old kid attending college in Washington, D.C. Where does a college kid want to go? New York, Boston. He did exactly that. Took the bus one way, figured, okay, smart thing to do. Let's fly from Boston back to D.C. Guess what, Carol Masser?
Is he back on the bus?
No, well, I thought about the bus, but then I decided to time it. The bus takes 10 hours. The Amtrak on a regular train takes 8 hours. The Acela takes 6:51. A plane at 1 hour and 50 minutes is very enticing, but then, as this story indicates, you've got all of the hassles associated with flights.
It's why when we all used to have to go to either Boston or Washington, it was often like, let's just get on the train, we'll get there. It'll be a much easier way of going, because even when things are operating as really in a good way pre-pandemic, it was still kind of troubling. I love this story about Dow Jones, and there's a line in this story. This year, it's as if airlines were starting from scratch.
Indeed. And though I've discussed this issue with our Tom Keene in the past, and Tom's right. He says what you have to do is you have to look at the schedules and you have to figure out when things go according to plan, because that's all you can operate from is the published schedules.
Well, it's hard because you've also got a lot of airlines canceling flights. Check this out. Southwest Airlines canceled 3% of its flights June 1 to July 14th, about 3 times the airline's normal rate. All right, Charlie, thank you so much.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Texas Instruments delivered a wide range for its revenue forecast in the current period, indicating uncertainty about whether a jump in chip demand caused by the pandemic will endure. The stock now down by 3.8% in extended trading. Whirlpool lower by 0.4% after ongoing earnings per share for the second quarter did beat the average analyst estimate. Tenet shares now down 4% after it reported quarterly results. It was an up day on Wall Street. Stocks climbed as a slew of solid corporate reports took the focus off of concerns about the economic impact of coronavirus flare-ups around the globe. S&P up 35, a gain of 0.8%. The Dow also up 0.8%, higher by 286 points. Nasdaq advanced 133 points, up 0.9%. Broad-based rally today. We did have the Nasdaq 100 index up 0.8%. Russell 2000 up 1.8% today. Small cap surging. Dow Transport's up by 1%. 10-year down 20-30 seconds. 10-year yield 1.29%. Gold down 0.4%. Spot gold 18.03 the ounce, down 6.84 the ounce. West Texas Intermediate crude rallied back above $70 a barrel. WTI up by 4.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So I am so excited to wrap up our show today with Hannah Elliott. Her coverage on cars, her reviews, her experiences with and around all kinds of cars, old, new, collectible concept, always a must-read for us and our audience. This time around, though, she's got some thoughts on the overheated car market and what some high-end buyers are buying as a result. Could it be that they're actually buying used cars? Well, let's get to it with Hannah Elliott. She's auto columnist for Bloomberg Pursuits. She joins us on the phone from LA. How are you?
Hi, it's great to hear your voice.
Likewise.
I'm doing very well. And yes, it could be that luxury car buyers are actually buying used cars.
What's going on here? And I love you. You profile a couple. Tell us about Gigi and Glenn.
Well, they are a very sweet, kind couple, and their big present to each other for their 40th anniversary, their 40th wedding anniversary, was a complimentary pair of Rolls-Royce cars, one Phantom and one Dawn. And it's all very exciting, and I went to a lunch that they had to receive the cars, and they're already talking about the next Rolls-Royce they want to buy, which is a Cullinan SUV. And it was funny because they were kind of complaining that the access isn't there. There are no Cullinans to be had. They're going to have to wait for 6 months, and it's just, they're not going to be able to bespoke it how they want unless they buy a used one. So the conversation kind of became, well, we could get one that's a couple years old, and that's fine too. And it was just a very interesting new dynamic to see in this car world.
Well, it kind of fits in, right, Hannah, in that we've talked so much about the hot car market because of the pandemic. People stuck at home. Everybody was buying cars, right, because you could get into a car and feel safe. And you could also, when you can't travel overseas, you can travel somewhere domestically and be safer. But this is unusual, right, for it to go to the high-end luxury market?
It really is. This is a sign, just like you say, of people who previously might have been happy to wait for a while to get the specific car they want. Now they would rather just have it now. And a lot of that has to do with they've got a lot of extra time. They have the money. They haven't been traveling like they might have normally been traveling. They might not be doing the social things, buying the clothing and the art and the wine and whatever else. So they've got time and they've got some extra cash, and it's like they kind of rather just have it now. It's this whole YOLO idea. You only live once. And really we're seeing perhaps it's not quite as, looked down upon in these circles to have a car that is a year or two old. What's the difference, really? That's kind of the feeling.
Well, and the thing is, listen, if your accountant's having it say, his or her say, right, I mean, the minute something brand new goes off a lot, I mean, it drops in value, right?
That's really true. I was looking at the depreciation numbers for instance, the Rolls-Royce Race, which is their two-door. And the minute you drive it off the lot, it's already at least 20% lower in value than if you had bought it new. And over the course of years, it can drop 45 to even 50% of its value over 5 years. So that's a lot of depreciation. Whereas if you buy a car that's already been used or pre-owned, or provenance, as Rolls-Royce likes to call it, you're saving yourself that drop, which is, like you say, a very smart thing to do.
So what's the kind of pre-owned program? Like, I'm familiar with the ones with what I consider luxury in my world, something like a Mercedes or an Audi, right? Those pre-owned programs have been around for a long time and pretty lucrative for those guys. What's a Ferrari approved pre-owned program like?
That is a great question. It's kind of the same idea.
Okay.
Ferrari has this Ferrari approved pre-owned program, which includes, 100 plus inspection points, system that the technicians go through. They actually take the car on a test drive. They verify the provenance of the Ferrari. Provenance is an important thing for this caliber of car. It also includes like 24 months of roadside assistance. It includes, complete maintenance and coverage for under a new warranty under this certified pre-owned program. So there are a lot of benefits. And really the other thing that I found, especially at McLaren, for instance, they say a lot of the people who go into the pre-owned program are first-time buyers of that brand, and they end up buying something new later on. So it really is a smart move, both by the buyers and by the brand.
And they buy something kind of another one. If they buy one, they tend to want to trade in, right, pretty quickly, maybe within a couple of years?
Exactly. Nick Brown, who is the president of McLaren North America, said that their average turn rate is 18 to 22 months on a lease. And that goes into a new car typically. So especially with younger buyers, which is this lucrative group that every automaker wants, and younger is like 20 to 45.
Hey, so
it's smart.
Well, one thing I was wondering too is we've been talking so much about the semiconductor shortage and the impact on the car industry. Daimler coming out and they slashed their car sales outlook as they said chips wiped out growth, the semiconductor shortages weighing on their business in the second half. What happens for a Bentley or a Rolls-Royce or a McLaren? Are they in the same situation?
That's a great question. They claim they are not. I specifically have asked, especially Bentley, Rolls-Royce, and McLaren. All three have claimed it has not affected them. They planned around it. It is easier to manage for brands that have such small volumes already. I mean, we're talking, under 5,000 cars globally a year. So this is a smaller group. They claim the shortage is more an issue of supply and demand, not a semiconductor problem.
All right. So this high-end car market, I got to ask you, listen, is there any way that people get to jump the line and don't have to maybe buy used?
We all want to jump the line. We all want to jump the line. Yes, if you already own a few Rolls-Royces, then you might have the ear of your friendly dealer who can usher you forward. Now, no automaker is going to go on the record and say you can skip the line. Right. But what they do say is, look, each dealer, it's a relationship. Each dealer is responsible for maintaining that relationship, and the cars will go to the appropriate people. So take from that what you will, but it does help if you've got a few Rolls Royces already in the garage.
I would imagine. I'm not appropriate. I can tell that already. All right, Hannah Elliott, you are the best. So good to hear your voice. And as I say, anything you do is always a must read. Be well and be safe. Hannah Elliott, she's auto columnist for Bloomberg Pursuits, joining us on the phone from Los Angeles. Coming your way in just a few minutes, Sound On with Joe Matthew. We caught up with him earlier. I'm guessing you're talking infrastructure?
We're going to start there at least. We're going to bring in Mark Zandi. I've been looking forward to this from Moody's Analytics. He's out with a report today. Of course, this was John McCain's old economic advisor. Says both of these bills need to be passed for the sake of the economy. We'll do it next.
All right, is that it?
Yes, indeed. Well, you want more? We've got a whole hour. I can keep going.
No. Be well, have fun. Joe Matthew with Sound On. Sound On coming your way in just a moment. For the whole Business Week team, have a good and safe evening. I'm Carol Masser.